we could see a rally of over 10% from Friday's close by the end of the year. Strong market, crazy world. They see the S&P 500 climbing to 2150 this year, up a decent 4.4% for 2015. Back with us now, Jeff Sott, Laif Meidell, along with Eric Schiffer, CEO at Patriarch Equity. Gentlemen, thank you very much for coming. Jeff, are we actually going to retrace our steps back up to 18,000 on the Dow?
We told clients this morning, late last week, that you're probably going to get a few-day rally like we had on August 26th and 27th. But we're in a bottoming process, and it is indeed a process. So if you get a peekaboo look above 2,000, I think it kind of stalls the markets out there, and you come back down. It's just like a heart attack patient doesn't get right up off the gurney and run the 100-yard dash.
Laif, there's something else about heart attack patients is psychology plays into their recovery. And we have psychology among traders the past 3 years of having double-digit gains over the past 3 years. 1 year we had a 30% gain. Are we spoiled by this? Is that why we think we're going to retrace our steps back up to where we were?
Well, you know, we always want to be positive and optimistic.
Hold on, Laif, go ahead.
We always want to be positive and optimistic. I love that. But, you know, I'd really feel better if Barron's would have put a great big bear on the front cover of Barron's, because I don't think we've really hit the bottom yet. And if people haven't really bared up, it kind of concerns me that we've fallen as we have, and yet the bull is on the front, so to speak, smiling still. Right. And I'm not really convinced that we're ready to go higher quite yet.
Eric, on the other hand, we heard Warren Buffett today talk to our own Liz Claimant about how the economy was recovering. He is buying into stocks like IBM. IBM, by the way, has not seen price levels as it is right now since 2011. So there appear to be some solid companies with valuations that are pretty low. Should we start picking them up?
Well, Warren Buffett looks at things over a 3 to 5 year period of time, maybe even longer. For the average investor, I think there's going to be a lot of pain ahead. I think you're going to see, with these ridiculous valuations, a situation where we could see 10, 15, 20% down from here. And so if you're in the market, you need cash, you definitely want to get out, because it likely will get a lot worse. There will be carnage ahead before we begin to move upward. And so you can't compare it to Buffett, who is looking long term.
Jeff, you were going to talk about the psychology of the markets right now. Go ahead.
Well, the psychology of the markets is you haven't seen anywhere close to the enthusiasm that you normally see at market peaks. In fact, most individual investors don't believe we're in a secular bull market. I don't think that the bottoming process is complete yet, and I don't, however, think we're going to go down 20% from here either.
Laif, the Federal Reserve Board claims that they're not influenced by what happens in the stock market. I don't believe that claim, but that's what they claim. If the markets do recover over the next week, doesn't that kind of put extra pressure on the Fed to raise rates because the economy appears to be doing okay?
I don't think so. I think Janet Yellen has done a really good job of kind of explaining, kind of outlining what her measures are. And I don't think we've hit the inflation number that she says that we need to. And I don't know if the jobs are really quite good enough. So I think that the great thing about Janet Yellen is she's been pretty clear about her goals. You're right, the market will look a little bit better. I think a lot of people will be speculating that the Fed will raise rates, but I don't think that's really what's going to happen.
Eric, what do you think? If the market does improve over the next couple of days, does that put more pressure on the Fed to raise rates a little bit?
You will see Elvis before you see them raise rates.
And what do you think, Jeff, finally?
My model always called for the Fed to raise rates in November, even though there's not an FOMC meeting. I don't think that's the right question. I think the right question is the pace of how fast they're going to raise rates once they start raising rates happens.
Yeah, they're probably going to do one and out. Jeff, thank you very much. Eric and Laif, thank you as well. Melissa, over to you.
Thank you.
Thank you.
Whether it's on Wall Street or Main Street.